Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Hey, the website's InsideRealEstateRadio.com, InsideRealEstateRadio.com. By the way, if you want to talk to us about any topic, it could be sports, entertainment, politics, business, which is what we're here to do, give us a call. The number is 888-787-KILIF, 888-787-KILIF. Right now, we're going to do a little bit of mortgage talk with Terri Waggoner over at Supreme Lending Rockwall, our resident expert. Her website, by the way, TerriWaggoner.com, TerriWaggoner.com. She can handle all of your mortgage needs, whether it's a new purchase, a refinance, a Texas cash out, anything you're thinking about, give her a call. TerriWaggoner.com is the website. And feel free to give us a call if you got a question for her right now. 888-787-CLIF. Terri, what's going on?
Oh, well, we're going to continue our discussion on credit because I think it's an important part of our puzzle that we have to put together here when you're purchasing a home. Yeah. So we talked last week about your payment history and the amount that was owed on each account that's on your credit report. Okay. And so the rest of the makeup of what goes into your credit score is the length of your credit history, your new credit that you have, and the types of credit that you use. So that's what we're going to talk about today. Okay. So obviously, length of credit history. The longer you have an account, be it revolving or installment, is going to that makes up about 15% of your credit score. By the way, it's going to make a difference. So a brand new account is not going to hold as much weight, even if you've paid it okay for the last 2 or 3 months. You've paid it on time. It's not going to have as much weight as the account that you've had for 10 years.
Right.
So someone that has had a credit profile for a longer period of time is probably going to have a higher credit score as long as they've taken care of that credit.
Right. So you would rather pay the old card down than and just make the minimums on the current cards.
That's probably I don't know how much weight it would give within the actual credit score, but just the account itself, as long as it's paid on a timely basis.
Gotcha.
I think you're good. As with any advice that anyone would give you, what you want to pay down is the one with the highest interest rate.
Yeah.
So, that's the one you want to pay down first. And like we talked about last week, you want to keep your credit card balances at 30% of the available credit. So if you have a $300 credit limit, you want to keep that balance at $100 or less.
Right.
Okay. So keep that in mind when you're paying down credit cards. So you may, if you've got 2 or 3 of them and they're all charged up, you may want to pay one down to the 30% and then start working on the second before you pay off that first altogether.
Okay.
Okay.
Well, and it's going to do a couple of things. Not only be good for your score, but it's going to keep you from getting in some trouble with your interest as well. Because all of a sudden it can get out of whack. And you're like, oh, wow.
Yes, absolutely. All right. So, and we talked about last week too, it's okay for you to check your own credit score. So you can go to the annualcreditreport.com that we talked about last week. You can actually call the credit bureaus themselves, TransUnion, Experian, and Equifax, and get a copy of your credit report. And that's not going to put an inquiry on your credit score. How many accounts should you have? How many accounts do you think you should have?
You need to have a few.
You need to have a few.
Yeah.
And you need to have a good mix, and we'll talk about that here in a minute. But what you don't want to do is open a bunch of new accounts all at the same time in a rapid pace.
Right.
Because that's going to look like you're up to something, So you don't want to do that.
They were sending me some good mail, and they all said 0 interest on balance transfers. And I was like, oh, great. I can take all these credit cards and stick them on these new credit cards, and I can reuse the old credit cards.
Exactly. Yeah. No. So here's the most important thing that we'll talk about today. It's not necessary to get every credit card that you get an application for. You don't need that many.
But I've been pre-approved.
That's right.
That's right.
So the flyer says.
Well, also, I got this flyer that said the dealership, local dealership, said I was going to win $1 million if I just brought that flyer back down to the dealership.
Right. Right. Yeah. So don't do that either. But be careful how many you open up in a short amount of time, because that's not going to work.
Yeah.
And even if you have credit for a long time and you open up new accounts, that can still affect your credit score. So if you've got established credit report and you've had credit cards for a while and you open a new one, it could potentially lower your credit score depending on what you do with that card. Okay.
Yeah. If you don't need it, if you're established, like you say, you really don't need to open up new credit.
No, you don't.
It may not be a good idea for you depending on how much you have open already.
Right.
Yeah.
Right. We all kind of need to learn to live within our own means, which I don't think we do real well sometimes.
Not so much.
Yeah. Okay, so what about credit inquiries? How do those affect us?
They're not good.
They're not good. They're not horrible, though. So 3 important facts to remember. Credit inquiries have a small impact. And I hear it every single time I talk to a customer. Well, I don't want you to pull my credit because it's going to lower my credit score. I heard that it's going to lower my credit score. Well, it will, but you're probably only talking 2-3 points. So if 2 or 3 points is going to ruin you, then we have another whole issue.
We got a problem. Yeah.
So, but that is the case sometimes. So,
yeah.
Yeah. So, and then there are other types of credit inquiries that don't really play into ruining your credit, lowering your credit score. So, but a mortgage and a car and things like that, those are going to potentially lower your credit score for just a couple of points. But we still have to pull the credit to see where we are.
Yeah.
Insurance will not.
Right. That's exactly correct, Richard. That's what I was going to say. Insurance and other things like that don't really affect the credit score. Another thing to remember is if you're shopping, they call it the shopping inquiry. So if you're shopping and you have me and 2 other mortgage lenders pull your credit, the very first pull is the one that's going to lower that score 2 or 3 points. The second and third will not, unless, of course, you spread them out. So if I pull your credit today and then 3 months later you have someone else pull it, and then 3 months later you have someone else pull it, that's going to affect your credit score. Each time, probably 2 or 3 points. Okay. Yeah. But if you have in a couple of weeks time frame, if you have more than one person pull it, that second or third person is not going to affect the credit score.
Right. So you can shop around. People think, that they can't.
That's right.
But by the way, best rates are right here with Terri.
That's right.
Just saying.
Right. That's right. Okay, so let's talk about credit mix real quick before I run out of time. Credit mix and the types of accounts that you have contribute to about 10% of your credit score. You can have credit cards. That's a good thing to have. Just use them responsibly. We've talked about that over and over and over. Different types of accounts. You can have the installment accounts. You need to have a good mix. You don't want to just have installment. You don't want to just have, the car payment or the jewelry store payment. I see a lot of that, and that be the only credit that you have on your account or your credit report is one finance company, and you have it 12 times. Go get you a mix of credit. Okay, so have you some credit cards, maybe 1 or 2, an installment loan, possibly a car loan, something like that. Just make sure that you have a good mix. And sometimes it's hard to get those. And what I've talked to a lot of customers this past week about is if you are starting off your credit and you don't have any, maybe a secured credit card is a good place to start. Because if you have no credit, it's hard to get credit because no one wants to offer you credit. If you have no credit score, well, we don't know what you're like, so we don't want to give you any credit. So a secured credit card, you put your own money in, you use that account for 6 months or so, then you go get you an unsecured credit card, and then you get you an installment loan, and you start building that credit. This is not an overnight thing. You have to work on building your credit.
Yeah.
And that's the reason it's important to start working with you early.
Right.
But I also heard that if you have a store credit card, that affects your rate more or hurts the kind of credit that you're using, whether it's a store like a Macy's card or some kind of card like that, rather than a MasterCard or...
Yeah, I don't have any research on that.
Okay.
So I don't know whether that's the case or not. I'm sure it probably plays into it. my personal feeling is that there are some stores, credit providers that hold more weight because you can tell when you're taking a look at getting a credit score up. So you want to do the what if. Okay, what if you pay this credit card down? Well, nothing happens. Okay, but what if you pay this account down? Oh my gosh, you just got 50 points. So I know that that's the case.
Okay.
There's no rhyme or reason that I've ever been able to find, and I just think some creditors hold more weight within the credit scoring system.
Well,
now, I don't know if they pay for that weight,
Right.
and I think that that's a possibility. That some creditors and some companies out there just hold more weight for whatever reason.
Well, ensure more prompt payments and payments in general,
Right.
because they know they can punish you. And folks, you want to, if you're early on and thinking about your credit, be strategic about what you're going to get. Get some cards that have benefits. Maybe think about what you need in life when things happen. Maybe you need to have a Goodyear card or an NTB card.
Right.
A lot of those have benefits like 6 months no interest.
Right.
For a vehicle repair. Home Depot, oftentimes has the 6 months or 1 year, no interest. Why not take advantage of those types of cards, for things that you're going to need? You
Right.
have water heater go out, you got to go buy one, whatever the case may be. Your airline points, your airline
Yes,
miles.
those are good.
All those types of things. So think about some benefits and be strategic about where you're opening your cards. Just because they say you're getting 10% off today at the mall, that's not really a good benefit.
Right.
It's just that's help. Taking out a card, one of those really is no benefit to you whatsoever. Hey, folks, we're going to take a short break, and we'll see you in a few.